Hey devs, it's Ryan. I hope you guys are having a really great day. Today's video, I'm going to be answering your guys' dividend investing questions. This is really going to be a beginner's video for how to go ahead and start investing for dividends. We're going to go ahead and answer questions such as what exactly is a dividend, how often is it paid out, what's a dividend yield, what's a payout ratio, as well as what is a PE ratio. So let's go ahead and get started. What exactly is a dividend? Well, a dividend is just a sum of money that is paid out to shareholders. And by shareholders, we mean investors. So if you're an investor in a specific company that does pay out a dividend, you're going to go ahead and just get money from that company. And you can think of a dividend as a company is making so much money and they have so much money, they don't know what to even do with it. So they say, you know what, we're going to go ahead and give this out to our shareholders as a thank you for being an investor in our company. Because we have so much money, we don't know what exactly to do with it. So that's all it is. It's just extra money that a company gives out to its investors. Now, how often is a dividend actually paid out? Well, it actually does depend on the company. The company is really the one that decides how frequently they want to go ahead and pay it out to its investors. I know some companies, they'll do monthly, such like a Realty Income, ticker symbol O. They do go ahead and pay out the dividend monthly. Then you can also check out Disney, or at least they used to. They used to go ahead and pay out their dividend every 6 months. So it's twice per year. But to be honest, most companies do tend to pay out their dividend quarterly or pretty much pay it out 4 times throughout the year. And you can think of it as they pay it out every 3 months. So again, this is for most companies that if they do pay out a dividend, they are most likely to go ahead and pay it out quarterly, where they take out whatever dividend amount they said they're going to pay you. So let's say $1. And usually, because if it's quarterly, they're going to go ahead and split it by 4. And so you can expect that every 3 months, you're actually going to go ahead and get a payment of 25 cents, again, every 3 months for being a part investor of that company. Now, what is a dividend yield? Well, a dividend yield is just a metric that makes it easier to compare the dividends between different companies. Now, usually you can find this by dividing the annual dividend per share with the share price. So with a dividend yield, you can think of it as if a company says they're going to go ahead and pay you out $1, but their share price is currently worth, let's say, $10. Well, you go ahead and take the dividend price, which is $1, divided by 10, because that's the current share price, and you can expect to get a dividend yield of 10%. Now, that's actually a really great dividend yield, by the way. But that's how you would go ahead and calculate the dividend yield, and that's sort of how you can think of it. It's just a percentage of how much you would get paid for that year in dividends, dependent on the share price of that specific stock. Now, you might be asking, do all stocks pay dividends? No, not all stocks actually pay dividends. It's important to remember that a company is not legally obligated to pay out dividends either. So if you found yourself a company that does actually pay out dividends, don't expect that they have to go ahead and pay it out to you. They can go ahead and, in tough times, go ahead and cut the dividend. I mean, that's what they recently did for these recent lockdowns. Actually, Disney just recently, I believe they completely cut their dividend, and to where they used to pay out a dividend every 6 months, but because of the whole lockdown this past year, they actually decided to go ahead and cut the dividend completely. Because remember, what is a dividend? It's just a sum of money paid out to investors. Well, usually when a company has money to just burn like that, yeah, they'll go ahead and, oh, you know what, we'll give it to our investors because we just have so much money, we don't know what to do with it. But in times of crisis like this, they actually need that extra money to go ahead and stay afloat, or go ahead and just, have extra money in their reserves. So not all stocks do pay dividends, so do be wary of that. Like I know Tesla, they're more of I guess you would say growth stock, although they've already kind of exploded, which is pretty crazy. But they don't actually pay a dividend. So be wary of that. If you want to go ahead and invest for purely dividend investing, dividend income, then yeah, make note that not all companies do pay out a dividend. What is a payout ratio? So a payout ratio just shows how much of the year's profit is paid out as a dividend. So usually, technically speaking, a payout ratio, you want it to be, definitely less than 100%, but ideally about less than 80%. So anywhere between 60 to 80 is a really nice sweet spot for a payout ratio. Now, this is also going to be dependent on the industry. So I believe it's with REITs, I believe it's a 90% payout ratio they have to meet. So it does depend on the industry. So definitely be wary of that. Some companies, they might need to have a little more cash on hand. So maybe for that specific industry, it's more common practice to have a payout ratio of 50%. And then like REITs, some of them tend to usually pay out around 90%, have 90% payout ratio. And the payout ratio is calculated by having the dividends per share divided by the EPS, or earnings per share. And once you do that division, you get your payout ratio, which is going to be a percentage. Now, what exactly is a PE ratio? Well, PE ratio is calculated as price per share divided by EPS, or earnings per share as well. So instead of taking a look at the dividend, you actually look at the price of the stock divided by EPS, or earnings per share. PE ratio can actually be used to see if a company is overvalued or undervalued, but this is also dependent on the industry. So you wouldn't necessarily compare, let's say, Coca-Cola with, I don't know, Tesla, right? I think they have like over 1,000 PE right now. You would usually want to keep it within the same industry, so something such as Coca-Cola and Pepsi. And then from there, if Coca-Cola has a PE ratio of 15 and Pepsi has a PE ratio, let's say 30, well, you're going to get more bang for your buck by purchasing Coca-Cola because they have a lower PE ratio. You can think of it as, would you rather pay $15 to get $1 back in earnings, or would you rather pay $30 to get $1 back in earnings later on? You'd rather pay 15, right? Because it's a better value for your money. Some of you might be thinking, if you've never done dividend investing, why would I want to go ahead and pay out, I don't know, $100 to get back just like $1, right? Only 1%. Well, with dividend investing, your dividends actually do grow over time. If you were to have just invested in Coca-Cola back in the 80s, just a single dollar, and you went ahead and let about 20 to 30 years pass, that single dollar of Coca-Cola that you purchased, the dividend that would be paid out is actually 90 cents. So just with the dividend alone, you would have actually reached a 90% return. Not to mention the capital that's continued to grow because you still own that share in Coca-Cola. So dividend investing does continue to grow both in capital as well as the income that is paid out to you for being a shareholder. One of the last questions is, I get asked a lot actually. So I want to go ahead and start investing, but I don't know how. Well, you're going to want to go ahead and open up what's called a brokerage account. And a brokerage account is just an account that holds financial assets such as stocks. And so this account is going to go ahead and trade the stocks on your behalf, and with that account, you can go ahead and buy, sell, and just trade different stocks and companies. And so if you're curious about which brokerage accounts to go ahead and open up, you can Google them, but some of them I personally recommend. I used to use Robinhood, though I've actually steered away from that just because they've had so many different security issues. I'm just moving away from Robinhood, and recently I've been using Webull as well as M1 Finance. Now, if you want to just kind of keep it basic, I would actually recommend Webull, and I'm actually going to go ahead and leave a link down below if you want to go ahead and open up a Webull account. If you use the link below, you'll also get 4 free shares once you put your initial deposit of $100 down once you open up your Webull account, and I believe we both actually get 4 shares each. So if you want to go ahead and do that, I really appreciate it. But if you also want to check out M1 Finance, they're really great as well, and they have like the different pies and stuff. But I think more for user interface wise, just simpler, I would definitely check out Webull first. But again, your preference, and it is dependent on what country you also live in. So I know like in Europe, I've seen people use, I believe it's 212 trading. So if you want to go and check that out, just look up brokerage account and see whichever brokerage account works for within your respective location. So that pretty much wraps up our dividend investing Q&A. If you guys have any further questions on investing, please feel free to reach out to me. You can comment down below. You can message me over on Instagram, pretty active there daily, so you can go ahead and message me there. If you guys have any questions even on perhaps different investing books or different concepts from investing books, you're not into reading, by all means, I love to read, so I have no problem sharing with you guys further information to help you guys on your dividend investing journey or just investment journey in general. I'm wishing you guys a really great day. I hope you guys gained value out of today's video discussing dividend investing. I really appreciate you guys' time. I hope you guys enjoyed today's video. Thanks for watching.